It's Doc Severson. Thank you very much, Drew and Financial Juice, for having us here. I am with 12-minute trading, and today our topic is going to be zero-day options trading strategies. So without further ado, we're going to get started. Now, some of you may know who I am. Some of you probably don't know who I am. My name is Doc Severson. I'm an individual trader and performance coach. I've been doing this since 2005. I turned in my notice for my six-figure job back in 2005. None of my friends could believe it. What are you, nuts? And so I was trading by myself. It was just me and the dog. And what I found was a lot of people started knocking on my door saying, hey, I heard that you quit your job. Could you help me do the same thing? And it became a line. So almost at gunpoint, I was forced into financial education. What I found was I really enjoyed it. Really enjoyed it. Wow, there's a lot of red stuff coming out from Fed's Powell. So hopefully it's having a positive effect on the market. So I've been doing this now for quite some time. I really enjoy working with people on this. I love the accountability of being a mentor, and it sort of focused all of my prior jobs into one thing, to be able to explain something difficult in a very simple manner. So the current services I'm working with are 12minutetrading.com as well as ReadySetCrypto.com, also working in the crypto markets. I'm a past contributor for Options MD, TheoTrade, Doc's Trading Tools, Options Linebacker, and Ready Set Trade. My specialties are fractal price analysis. This means multiple time frames, being able to break things apart and apply that towards each other. Options and futures strategy, and trading mindset, because I had to hack my own brain and understand why I was making the decisions that I was. And this is why I wrote this book, available on Amazon, Hacking the Holy Grail. So that is one of the two books available on Amazon. The other one is Fractal Energy Trading. You can see both of those. If you just search on Doc Severson, you can find those. Again, my job is to simplify the complex. We have a complex problem in front of us here, which I will attempt to explain today. So my purpose for you guys, there is a continual list of new traders getting exposed to the market. And rather than have them be chum, right? So we all kind of stumble into the market in the same way. I want to see the little guy win without getting stepped on, without thinking that they have to join some kind of crazy herd or follow a wild subreddit to learn how to win. There's something really, really compelling and that provides edge with these zero-day options. It's one of the best natural edges that I've seen available to retail traders. I want to expose that to you today. I want to walk you through a process that you can follow. I want to make this simple as possible for you to get going with this. So I'm going to walk through this in a very linear fashion for you guys. In general, what I hope to do is, after the space of about an hour, help you decide if this is something for you. Okay, so on your mark, get ready, get set. Let's go here. You can also see that I tend to do things in a very visual format, so you can see the progress that we're going to make through today's session. So you'll know kind of when we're wrapping up and when it's time to leave. So why we're here today? Why are we here today? Almost all of us are here for finding some type of financial independence, right? So financial independence and financial freedom is what we're all after. But here is the thing, is that using yesterday's methods won't work anymore in today's market. So the old paradigm of investing was to continue to build your pile of assets, right? So build up your account, keep building it up and building it up and building it up. And then what you can do is, once you reach a certain amount, you can then live off of the interest, right? So this was the old paradigm. Build up $1 million and then live off of 50,000 a year at 5% APR. That sounds great, but the problem is, in today's world, even though we're earning, on some accounts you're earning up to 4% you can't live off of the annual interest, even with $1 million account these days. Things have gotten to be so expensive that you just can't live off the interest, even with $1 million. It's the accumulated rate of inflation which has killed everybody in the last couple of years. And we all know the reasons why: the helicopter money, the congressional spending, you name it. We're not here to pass judgment on these policies, just the reality. We have to find a way to work with it. So the current alternatives to interest have been, and if you go to any financial advisor, this is the triad that you're going to get. Well, we can get you into annuities, or hey, look at these bond yields, or hey, let's play some stock dividends. And so this is the usual triumvirate that we go through, right? These are usual alternatives to creating income, but they don't work in today's market. You're not going to get enough yield from this to be able to finance your lifestyle. Annuities lock you in for years to receive a tiny rate. Bond yields are correlated to the interest rate. They're coming up, right? But still only reaching 5%. Or you can go after stock dividends. Can we be upwards of 7%, but you're going to pay for it with a lousy looking chart. Okay, so this means that we put this all together, that most are not prepared for this new reality. You can follow the old paradigm of growing your pile of assets. Being able to make money on your money is no longer there, using the usual suspects: bond yields, annuities, interest, dividends. It's just not working. So what the problem is that retirees are going to be shredding through their principal in no time, wondering what changed, even though this has been happening very slowly, like a frog boiling in a pot, for the past 2 decades. So in the words of Private Hudson from Aliens, what do we do now, man? Game over. Well, I don't think so. I think there's things that we can do with this in today's market. So what we need is income. Income is to the rescue. Income is what we receive through interest, dividends, and bond yields. How can we replace this? Well, there's a couple of ways that we can do this: through passive income. This is earned without active participation. So this is what typically is what you would get through interest and dividends that we have to replace in passive income. Or there's active income. Active income is typically what, like a job or active trading, something where we have to get in there and mix it up every day. So these are different forms of passive and active income that can work to replace the old vehicles. This is what we need to replace. Now, can we use stocks for this? That's usually what most people say. Well, can I just trade stocks? Can I just get in there and trade stocks every day? Well, yeah, you can, but if you're going to go after the market leaders, you're going to find them to be relatively expensive, right? So as of this morning, Apple's $184 a share. NVIDIA is $479 a share. Just about everything else in the magnificent 7, or maybe it's 8 now these days. These are expensive. These are not, I mean, it takes a lot of capital to make money with these things. You've heard the expression, it takes money to make money. Well, that's what we're seeing in today's market. It takes a lot of capital to trade in and out of them to create income. So I don't think it's a great idea. And the other thing that's against this is they put this horrible rule in years and years ago, because back in the 90s, a lot of people were doing day trading of stocks when things were cheaper. And so what they did was they set up this $25,000 threshold. Anything below that, if you do too many round trips intraday, you get tagged as a pattern day trader. I don't know if anybody out there has ever been tagged as a pattern day trader on your account with less than 25,000, but it's terrible. It basically locks you out of trading until the funds settle and clear, maybe days before you can trade something again. So to me, trading stocks for income requires too much capital, too much trading. Pattern day trader rules are too restrictive. It's not an answer for us. So stocks for income, no. But options for income, yes. Using options allows us to replace our interest income from the old paradigm. So passive income, we can sell longer term options. We can act like an insurance company where we're selling the risk premium to buyers. And then active income, we can look for short-term opportunities to either buy or sell options, using this leverage of options to more efficiently use capital. I still like the insurance company model, even if I'm trading these intraday. So here's my assumption. If you guys are showing up here to Financial Juice, you probably have got some chops. You know what you're doing. I'm going to skip the usual background on options and get right to the strategies. So if you need more background on options, we could certainly point you in the right direction if you need that. But for those of you that are interested and want to take the next step, that's what the rest of this time together is going to be about. So how do we generate active income using 0 days to expiration option strategies? Now, I need to do some definition here before we get going. And the first thing we need to do is, what's our goal? What are we trying to accomplish when we do this trading? Is it just to go out there and make as much money as possible, or do we have a tangible goal? And so what I always recommend for people is that they fix on a certain daily goal. I think this really, really helps people. And the one that I would start with for most people would say, can you earn $100 a day in income? So what is the methodology and the purpose and the function behind creating that income? Now, usually when I say $100 a day, most people start to scoff and say, come on, I make a lot more than that in my job. I need to replace what's in my job. So we need to do, $100 a day isn't going to cut it. Here's my point though, guys. How's that working out for you if you're trying to replace your income all of a sudden? So maybe you're making, let's just say, $15,000 a month. How easy is that to just step right in and make $15,000 a month? It's not that easy, is it? So I want you to start somewhere. A journey of 1,000 miles starts with a first step. You've got to start somewhere. I don't care if it's $10 a day. Squash that ego and focus on consistency. If you can make $10 a day, then you can learn to make 100. If you can learn to make 100, you can learn to make 500. If you can learn to make 500, you can learn to make 1,000. It's about stretching that muscle that's between your ears. Now, here's something that I got exposed to. This is a friend of mine by the name of James Clear. And he put out this, he's got this awesome book called Atomic Habits. Hopefully some of you have read it before. But if I were to come up to you and say, hey, how's your trading going? You're like, oh, all right, I'm working on it. And I say, okay, here's your mission. I want you to get 1% better at your trading strategy between today and tomorrow. Can you do that for me? And you say, sure, I can get 1% better. That's no problem. And so you come back the next day and you're, darn right, you're at 1% better. Awesome. High five. Now do it again tomorrow. And then the day after that and the day after that. If you're able to do something like that, if you're able to add up these tiny gains day after day after day, this is the law of compounding. You're actually going to be 38 times better at something by the end of the year. Can you imagine being 38 times better at your trading strategy right now than you are? All it takes is just the aggregation of these marginal gains on a day-by-day basis. On the other hand, if you get 1% worse every day, by the end of a year, you're basically at zero. So here's what we're going to do. If we want to make something, I don't care if it's $100 a day for you or something more than that or something less. Let's pick one thing, start with a modest goal, keep it below your risk radar. Keep it quiet, right? So your brain stays passive, and continue to improve on it every single day. The great thing here is that trading 0 DTE options allows us to get lots of trades and potential improvement over the span of a year. Now, here's something that we also use is what I call the income pyramid. So what we might do with a big chunk of our capital is use those really sort of slow subterranean income trades that may last for 90 days and they just chug along in the background. It's like a long, slow insurance policy that slowly you're bleeding dry. And you're not going to do much with these things at all. These could be things like, great big, large iron condors. These could be time spreads. These could be, even stocks with cash secured puts and covered calls. It could be anything like that, right? So as we go further up the pyramid, we're taking more directional risk and we're using less capital as a result of that. So if we want to do swing trades, they may use a lot less capital. And the zero DTE to me is going to be up in this very top of the pyramid. We're going to use the least amount of capital for this because we don't really need to drive this all that hard. We in here every single day. We have these options available to us every single day, and I'll explain those in just a second here. So there's a direction that we use behind this. So we're not going to put our entire account into zero DTE trading. That wouldn't make sense. Now, your approach is going to be different from everybody else. So everybody comes to trading with a different level of knowledge. They have a different amount of time available that they can spend. And everybody's got a different level of capital. So knowledge, capital, and time, and that Venn diagram will meet somewhere in the middle. And that's the approach that works best for you. So not everybody, a lot of people come into this and they go, well, I can't do anything with this because I don't have much capital. Or I can't do much with this because I don't have much time. I work during the day, so how can I fit this into that? All right, give me somebody like that, however, which is open to increasing your knowledge and understand that there is no limit to the amount of knowledge that you can pack between your ears. Also through experience. So give me somebody like that any day. Somebody that says, hey, I don't know a lot of things, but I'm willing to learn. I don't care how much capital I have. That I can always increase. And I don't need that much time during the day. That's what we call our business 12-minute trading. So this is what I want you to work towards, is understand that your knowledge, the amount of knowledge that you can pack in there is unlimited. And the great thing about human behavior is once you start to see a little bit of progress, it's going to be like a drug. You're going to come back day after day after day because you're going to see that progress on a day-by-day basis instead of having to wait 30 days to see the outcome of trade. So your approach is going to be different for everybody, but don't let capital or lack of time limit you in what you can do. Now, yes, it is easier with larger accounts. We can just, if you got 7 or 8 figures for an account, you can just pile up with cash secured puts on Apple and just call it a day. Maybe that's going to be good enough for you. But for the rest of us, we're going to need to use active income for this. So passive income is great, but only for bigger accounts. So what we're going to focus on today is active income using zero DTE options. And I swear I will define what those are in just a second here. We're going to enter these trades, enter and exit these trades in the same day. And if we only do them 3 times a week, we can avoid small account or pattern day trader lockdown issues, right? So if we're only doing 3 round trips a week, then we don't get tagged as a pattern day trader. So active income means we're flat at the end of the day. And isn't that a wonderful thing when we see how much risk is out there today? And yeah, apparently the market does not like Powell's comments. I don't know what they are. We'll find out later. Okay, so again, the point here is that we have kind of a purpose. We're trying to earn a certain amount of income per day. We're not just in there mixing it up with the market. We've got an actual purpose. We're running a machine. So let's define these zero DTE options. These are options that expire today. Now, we've had weekly options around for a long time, since like 2005, I think, is when they first started. It used to be when we were doing this a long time ago, we would just have these monthly options. Like here's November's and here's December's, and you got to fit everything into those. That's it. Those are the only options that you got. Now we got weekly options, and these expire on Fridays. So every Friday now on these big equity stocks, we have a Friday expiration. Great. But then what happened was the S&P 500 cranked it up a notch. And in 2022, they started adding, well, this actually goes back a few years. In 2020, they started doing Monday, Wednesday, and Friday options. And then in 2022, they added Tuesday and Thursday options. So now, as of this year, and they're not going back either. If I had to guess, that we'll probably do intraday options at some point. So now we have 5 weekly expirations per week. Look at this. We have for next week, Monday, Tuesday, Wednesday, Thursday, and Friday. And then a big old monthly option there too. Every day of the week. And the great thing is the spiders and the Qs, the ETFs, which are notional equivalents, or not notional equivalents, but they're derivatives of the index. They also have 5 times a week. The spiders is 1/10 the notional value. The Qs are 1/40th of the NDX. And here's the cool thing too, is that we also have 0-day options on the NDX, ES futures options, and micro E-mini futures options as well too. All right, so there's lots of different, and this is going to only increase. Right now, like the IWM, which is the ETF of, I think the Russell is only 3 times a week, and the Dow ETF is only Friday weekly options. So right now we're just focused on the S&P 500 and the NASDAQ. That's all we really need. We don't need anything else besides that. Now imagine this. You walk into a room and you've got a blazing fire on the other side of this room. This is my attempt to draw blazing fire, okay? So you walk into the room and you're holding an ice cube in your hand. Now, holding an ice cube in your hand, you're going to have a certain amount of passive melt of that ice cube just sitting there because your hand is warmer than 32 degrees Fahrenheit. But as you get closer and closer to that blazing fire on the other side of the room, that ice cube is starting to pick up a little bit of heat, and it changes with the square of the distance. So the closer you get, the more heat it picks up. And so what happens is by the time you get close to that thing, it just falls off a cliff, and you're left with a puddle of water in your hand and no longer an ice cube. This is the way that options work on a 0 DTE basis. So what starts out at the opening bell by the closing bell is going to be 0. Imagine that. So especially if you sell something like that. So this is not a big advantage to you if you want to buy an option because you're dealing with something that's only got very short time to live. But when you sell something to open it, now imagine this. Imagine your insurance company. Imagine how difficult it would be if you had to renew your auto policy every single day, right? How annoying would that be? But that would be great for the insurance company because maybe they could wake up one day and say, nope, we're not going to insure you today because we see that you're about to go drive on a long trip and you're going right through Manhattan. So we're not going to insure you today. So now you've got the edge because you're selling something like that. So these options expire today. Now, these are very, very sharp instruments. A lot of people get excited by this saying, wow, I could do this every single day. This is awesome. If you're not an expert at the entry, defense, and risk management of your option strategy, this is no way to learn. You want to learn on something smaller first. Do you guys remember those old batting cages? Well, maybe they still have them in some of the sports parks around the country, where you could hit a fast pitch baseball, and they usually have different speeds. So you can walk in and say, all right, here's a 40-mile-an-hour fast pitch. Here's 60 miles an hour. Here's 80 miles an hour. Don't walk in the 80-mile-an-hour fast pitch and try to hit that thing first off. If you've just learning how to swing a bat, get in there and get good at the 40-mile-an-hour first, then move up to 60, then get to 80. Okay, so those are 0 DTE options. Now, how do we use them? Well, we can do directional trades and we can do non-directional trades. So let's cover the simple one first, since we're seeing so many of these trend days these days. A trend day is one where the price shows a large daily movement in one direction. So on a daily chart, we can see these trend days where it's just where it starts and where it stops. It's just a big, big differential, and it can go both ways, obviously. These are more prevalent during bear markets, but we can see just as many of them in bull markets. Maybe they're just not as big. So 0-day options are extremely responsive. The at the money gamble, I don't want to bore you with the Greeks, but it means that they're very twitchy. They move around in extreme fashion. And options value will literally explode in value as it moves to be at the money. You bought it out of the money. If it moves into the money, it will explode in value. Now, can we do long options? Yeah, you can, but I wouldn't recommend it because that's a lot of money. I took this a couple of hours ago, and you can see that these options were still showing a lot of extrinsic value here. So that's $450 option if you want to play something on the SPX. You could probably use something on the spiders to drop your risk on these. Okay, so really we don't use these long options. Even though they can be explosive, it's attractive, but it's also really hard to win these. So typically what we're doing is we're using vertical spreads. We're using a combination of a long and a short option to create a spread and makes it much, much easier to win. We put the odds much more in our favor with a trade like this. Now, how do you judge a trend day? This is where I'm going to use what's called the opening range. The opening range. So the opening range is the first 30 minutes of the trading day after the opening bell goes off. And so if you're in the Eastern time zone, it goes from 9:30 to 10 o'clock. If you're in Central, it goes from 8:30 to 9. That's the opening range. And so that's the market's chance to kind of set the tone for the day. And so this is where we can determine whether something starts off as a trend day or as a range day. A range day is pretty obvious. It's just going to trade within a range. Doesn't have to stay there all day. In this case, we started as a range day and eventually it turned into a trend day. To the downside, this one was pretty much a full-on trend day from the very get-go. You know, once you see it trading above the opening range with some strength in the internals, then you're pretty sure it's a trend day. Similarly, if it sets up the opening range and then it just doesn't seem to be able to go anywhere past that point, you might be looking at a range day. So we can use these in different ways for what we do. Okay. So those are directional options. We don't spend a whole lot of time with this because we don't have as much of a statistical edge with a directional trade. So if we see a trend day, maybe we'll jump after it. But this is typically what we're using as an iron condor. Hopefully you guys have heard of something like an iron condor before. Condor is a bird with very, very wide wings. And that is the intent of naming it in this manner. Because what we're doing is we're setting up a trade where we can win if the price stays within a certain range. And we can define how wide we want that range to be and everything about it. So it wins if we stay within a range, like a range day, right? If it's a range day, then we want to use a trade like this. Now, there are different types of iron condors. I don't hear a lot of people talking about this, and some of these are my names that I've given them because there's nothing else out there. But a high probability trade is how a lot of retail traders learn how to trade this on. This is where you get these wings that are, you know, way out of the money, where you're selling something. Each side of the trade has got maybe a 95 to 90% probability of success. And so anything generally an 80% probability of success or higher is what we call a high probability trade. Now we can also go to a low probability trade. And the lowest that I will go on this is 50% probability of success. So basically what it means is what you're risking is what your profit target is. So there's a 50% chance of success right out the bat. And there's some certain advantages to those, which we'll talk about in a minute. And then if you've ever heard people talk about a 1 standard deviation iron condor. So people like Tasty Trade talks about 1 standard deviation iron condor. And this has got a 68% probability of success. So it's in between these two. So in between the high and the low is the one expected move. This is what I call a hybrid. And then we can collapse this into zero width and make this an iron butterfly. And we'll see the use for this in a minute. It's one of my favorite trades. Okay, so let's talk about the high probability iron. Again, this is probably the most popular form of iron condor for retail traders. Because, and I remember thinking this when I started this business 18 years ago, hey, wider is better, right? You have a better probability of success with a trade, and wider is better. Well, yes, to some degree. Now, what I've also found over the years is that there's no one trade that's better than the other. So wider is not necessarily better than a more narrow trade. It's just different. It offers different characteristics. And what you have to find is over time, you have to find out which trade appeals to your sense of confidence. So the big advantage to a trade like this is the high probability that you're starting with. You're starting with a great big wide range for this trade, but the problem is down here, this is the bad stuff, right? So we're going to draw, a sad face down here. If you ever get into the black hole, which is down here, that's no fun, because all of a sudden you find that you're in one loss, you've given up maybe the profits from 8 to 10 trades. No bueno. So a lot of people like to intraday trade these. If we're going to do something like that, if you see the price doing something like this, you're setting up the call spreads up here as the price kind of fades out, and then waiting for a pullback and setting up the put spreads. That's it's certainly an advanced topic for something like that. It's not really one that I recommend. So believe it or not, I do recommend people stay away from this type of iron condor. Again, that's what I traded when I first started. And I did well enough with this trade to be able to quit my job and trade for a living. But what I learned is, especially during the great financial crisis, which occurred about 2 years after I turned in my notice, that these are very difficult trades to risk manage. So the opposite of that is a low probability iron condor. So this has got a 50% probability of success. Like if you get a $2.50 credit for this trade, the most you could possibly lose is $2.50. Okay, so that's not so bad. So this is a type of trade where if you're going to get on an airplane or travel or something like that, or be out of touch for a certain amount of time, this is the trade that I would put on, because I'm okay with the amount of risk down here. If this is defined as R, and that's your risk, I'm okay with that. So this is it. And the other thing you'll notice too is that even though this is a lot more narrow, than the high probability trade, this is so much faster. Everything decays so much faster. So if you like faster profits, you got to play closer to the money. You got to play that close quarters combat. And that's where the profits come faster, especially intraday. And now we're going to go out to the next version, which is the expected move. I've been playing a lot of these, been playing these every single day for the last couple of months, and they've been working great. So this is a hybrid iron condor where we're setting the wings at 1 standard deviation. Now, to identify this is typically where you're going to set them up. I think technically it's something like a 16 delta. What I'm finding, though, is that I usually go in just a little bit closer than that to be able to get a credit, at least a decent amount of credit for this. So you can identify what that expected move is and then place your trades at that 1 standard deviation or 1 sigma level. So I like these a lot. These work really, really well in today's market for 0 DTE. And I'll show you an example of one that I just closed. I think it was yesterday. Here's the iron butterfly. This is one of my favorite trades. This is my favorite version. And you might be saying, Doc, what are you, nuts? Why would you want to go that narrow? Because they're super fast. They're super fast. If you can find a way to get to get the price to kind of stay in an area for a short period of time, and it doesn't need to take all that long, typically less than half an hour, then I can get my fair share for the day and be done. I don't have to be watching a screen all day long. I can get in there, roll up my sleeves, slug it out with the market, get my fair share, get out, and I'm done. I've got the rest of the day. You don't want to trade one job for another. One of the things that I've done over the years is I've traded futures, and futures trading can be awesome, but it can drive you nuts, especially if you dig a hole at the beginning of the day. Next thing you know, you've spent 7 hours staring at the screens all day long. You've traded one job for another. This is why I love the butterflies. In and out. You get your day back. So which one is best? There is no best. There's only the one that works for you. High probability condors. Slow, they don't pay very much, but they're best for those that can't actively manage. So if you've got a job, if you're trying to do this and work a job at the same time, maybe this is what you need to do. Will usually take all day to get your fair share, and the commissions will eat up a fair amount of this. Low probability condors, tightest range of the condor family, but faster to profit. Great for risk management. Expected move condors, which is a great compromise. It takes about 3 hours to get $100. It takes maybe 90 minutes to get $50 per contract on the SPX. And then there's the iron butterfly, the fastest version of the iron condor. Creates $100 in about 30 to 60 minutes. $50 might only take you 15 minutes. Downside is the width to work with. You've got to actively manage those. You can't let them run away. So this is not a set and forget trade. So anyone can enter an iron condor, zero DTE trade. The skill comes in knowing when to enter and when and how to exit. Avoiding trend days is key. So if we're trying to trade something non-directional, trying to get away from a trend day is very key. So don't let a profitable trade turn into a loser. Don't get greedy. Get your fair share and get out. And don't get back in. It's that simple. And it's easy to say, but sometimes it can be very tough to follow that. And don't forget, even if you take a small loss, there's 4 more days remaining to trade every week. So it's not like you're like, this is the last chance I'll ever have to find this strategy. You get another chance tomorrow and the day after. That's what I love about this. Okay, so those are iron condors. Now I'm going to talk briefly about calendar spreads. These are faster than iron condors, but they have their own characteristics about them. It is a time spread. You're selling the front option. You're selling today's option, and you're buying an option, which is the back option, which might be something like a week out, normally a few days further out in time. And that's what they look like. So what is the edge here? Well, remember we talked about that fire. Okay, so here is today's option, and then here is next week's option. So what's going to happen is next week's option is going to maintain most of its value throughout the day, but today's option is going to go to 0. So it's this differential is what you're looking for. This is the fundamental edge and will never disappear. But you have to take care to keep the edge. So what are the risks of this trade? Well, if you get a trend day, all of a sudden you can see the skirts of this trade can fall off very quickly if you get a trend day. So all of a sudden you're staring at, a 70 or 80 point day, and these can hurt if you just are a deer in the headlights. And what happens if the back option volatility collapses? Well, this is where you get shrinkage, and it's not a good thing, because what happens is the whole profit target, the whole envelope will shrink like this. And most people that are used to vertical spreads and iron condors are not used to that. So it's a very real risk that you have to avoid. So you can adjust for trends. This is what I like about these is if you start with a single calendar like this, what if the price starts to really move? Well, guess what? You can add a second one up here, doubles your capital, but it turns it into this sort of circus tent looking trade. And it gives you a lot more room to work with. It will slow things down, but that's okay. Double the capital slows it down. There's always going to be a downside for this. There's never anything that comes free, cheap, or easy. Now, what I find with this type of trade is it's much more of an accounting challenge, especially if you have to make adjustments in rolls or anything like that. You have to keep track of what you've spent on the trade so you know what you have to ask for to be able to profit from the entire thing. So I've always had to come up with different types of worksheets to be able to manage these trades and keep them mechanical. Now, which one's better, iron condors or calendars? Iron condors are easier to qualify. There's fewer things to go wrong with an iron condor, but the payoff is typically a little bit slower. So calendars are, I would say, better for lower volatility markets. So if we transition into in 2024, another low volatility grinding market to the upside, then calendars will probably be the right strategy to pick. Much more appropriate for quiet markets. It is a tougher trade to manage, no doubt. Okay, so those are calendar spreads. Now, what do we do about charting? We're moving right along here, and we're going to come in on time and in budget. Okay, so what technical charting tools do we need to help us with the zero DTE trades? Oh, there's got to be a magic study, right? Nope, not in your life. No lagging study that I'm aware of will help you anticipate or forecast intraday price action potential for a zero DTE trade. Learn to use the price to frame in the battlefield. And this is me speaking with 15 years of frustrating futures experience that using studies intraday does not really help. You want something that's instantaneous and the price is not lagging. Learn to use price to frame in the battlefield. Keep it simple. Learn things like price gaps. These are price gaps on a daily chart. The S&P will gap up or down every day, but as it gaps, track what yesterday's closing price was and whether the price is interested in filling the gap in the first hour. If it's gap and go, so in other words, if it gaps and it doesn't look behind and it just keeps on trucking, you might expect to see a trend day. So be careful of those when you see that gap not being filled. Now, here's my favorite. This is the opening range. The opening range is, as we talked about, the first 30 minutes. So understanding how to use the opening range to kind of frame in the price action and look for these gaps. So there's different types of, we can use the opening range to see, like in this example, this turned into a trend day. So this was pressing to the downside from the very get-go of this day, turned into a downside trend day. Here's an example on the right side, though, where we set up the range, and then it was pretty obvious that the price wasn't interested in trending, at least for a good deal of time. This is a very late in the afternoon. So by then, we've gotten our fair share. Typically, we want to get in, get our fair share, and get out within the first 60 to 90 minutes of the day. We don't want to make this another job. Does not need to be another job. Okay, so that's our opening range. Very, very powerful tool. And then we also use the expected move. We can see the expected move every day, which here's the opening bell, and there's a plus and minus expected move. And I can't tell you how many times I see the price bounce off of these levels. The price will come down to the lower or upper expected move, test that, and then move off of there. Happens all the time. Everybody knows what those levels are. And it becomes a self-fulfilling prophecy to some degree. So I would say keep it simple, right? You can't predict the future. Do the best job you can to avoid being trucked by a trend day. Or conversely, you can leverage the volatility of a trend day with directional trades if you want to do that. But you can't win from the sidelines. You'll definitely lose if you wait for everything to feel good. You got to be aggressive with this. If you see a read, and this is where experience comes in, is that you'll get a quicker and quicker read on whether it's a trend or range day in the first few minutes. Okay, so we're flying right along here. So let's go into some examples. I will get to questions at the very end of this. What I've learned after doing this for a few years, if I got caught up in questions, I'll never get finished. So for those of you that just want to watch the material, I'll finish here in just a few minutes, and then we'll go over questions. So some examples. So I haven't done calendar spreads for quite a while now. 2020 was when we were doing a lot of calendar spreads, but man, these things can be super fast. Here's 7 minutes for $125. That's my kind of day. We've had kind of noisier markets since then. Expected move iron condors. This was yesterday. This was a 68-minute hold, profit $50 per contract, or 16% return on risk. We do these just about every single day. These are great. You got a lot of room to work with. The risk is manageable. There's ways that I can double up on the trade if we run into a trend day by accident, but I love these things a lot. Again, low probability condors, I don't do too many of these. I think the expected move condor works a little better for these. So now directional spreads, again, we'll do some versions of directional spreads. We'll do things like broken wing butterflies as well too. If we get a trend day, or if we get a test of an expected move and a rebound off of there, then we'll do some type of directional trade. And then, of course, there's the iron butterfly. Again, this is my favorite. So here was a quick trade this morning. So this is a very typical trade. So again, I don't know where things are going to go. I don't know where things are going to go. I didn't know at the time whether the price was going to keep on going or come back up. This is why we trade off the hard right edge. We don't know what the future is. So I started out this trade this morning saying, okay, looks pretty range bound, and then immediately started ripping to the downside. I got enough of a bounce back up into this trade to be able to make, after 24 minutes, $25 per contract. So $100 on the trade in 4 contracts. I'm not going to retire on that. But you do this every single day and it adds up. You do this every single day and it's amazing how it adds up. So this is the profitable zone for this. So we started out here in the middle and immediately the price started moving to the downside. So it's, you do what you can to manage risk and you get out of trades that you think are going to start to trend, which it did for a while until it came back in. Okay, so in and out in a very short period of time. Oh, actually, I got some more on this. So the performance of this trade. So just to give you an example, in 2021, we did 111 trades. 108 of them were winners. So that was a crazy year. Profit factor was off the chart, 6.9. Last year, we did 105 trades. 96 were profitable. Profit factor was again off the charts, 591. And currently for 2023, this is what I'm looking at right now, 96.6% win rate, profit factor 3.5. Anything above 1.5 is good. 2 is great, and 3 is awesome. So for every dollar we lose, 353 coming in. It's an ATM. So again, most of these you'll see the hold time is actually fairly low on these. Look at these, like 15 minutes, 16 minutes, 36 minutes, 55. 1 hour and you're done. Here was 3 minutes, right? So that's my kind of style. So that's the iron butterfly. That's kind of my secret weapon for these. So let's put it all together and we'll take your questions in just a minute here. So to me, there's only one narrow path to success. One narrow path to success. I think there's people try all kinds of different ways, and there's only one way that I've seen that works. And this is, I had to go through this. Everybody I've seen that succeeded has got to go through this as well too. So growing your pile, don't try to focus on growing capital using traditional methods. creating income today using passive and active income is the key towards today's market. So learn to use options. So even if you're a stock trader, take the step. You've got time, the cost of knowledge, and there's tons of resources out there. You can do it. If you've ever bought an insurance policy before, you've bought a put option. You know how they work. $100 a day. Don't try to climb the mountain of financial independence all at once. Focus on a repeatable, modest goal so you can gain confidence, mastery, let the compounding work. You can always build that muscle up bigger. Learn zero-day options. They have a 6.5-hour lifespan and display very specific characteristics for time decay. They put the edge in your favor. They're now available 5 times a week. Iron condors, learn about how to trade non-directionally, where you don't have to win, right? You're playing for the price to stay within a certain range and not directionally. When you trade directionally, there's only a 33% chance of winning to begin with. These, they flip the odds in your favor. You can also learn about calendar spreads, but that's a more advanced skill. So these are better for low volatility markets, which we're not quite in yet. And then, of course, trade small to begin with. Please start small, work your way higher. Repetition is the mother of skill. Okay, so how do we summarize all of this? Hopefully you've gotten something from here. It's my belief that everybody needs to shift to an income-based focus, ditch the old financial income paradigm that no longer works. So you might be wondering how you get started with this. I can give you an answer to that. Consider joining our community at 12-Minute Trading. So we're a community of traders that seek high probability, low risk trades in the stock and options markets. We're seeking to earn consistent income on a daily basis. We provide the structure and the guidance to show you how to come up to speed with zero DTE. Don't forget, goals are for people who care about winning once. Systems are for people who care about winning repeatedly. This is what we focus on. And so at 12-Minute Trading, we focus on market analysis and income. We do 5 times a week live daily trading room. We do live online communities, live trade notifications, multiple trading courses. We've got just about everything. And so today, what I'd like to offer you is if you're interested in learning about the zero DTE strategies, how to trade them, we're doing a special right now for $59. So this is not one of these 1997, lifetime kind of things. This is a $59. We're going to run this through this weekend, and then it's going to go up to the street price of $99. So get your 40% discount by acting now. You can see what's in the course. Actually, what I'd like to do is I'm going to bring over hopefully this shows up. I'm going to bring over the dashboard here, and we're just going to kind of roll through the masterclass here for a minute. So we're going to walk through. So everything is broken down into modules in much the same way that we just talked about here. So we've got anything from, just straight text that shows you what to do, which you can read whatever you want to. And also we have video as well. Hello, too. And welcome to the zero. Oh, that's me. Okay. So we also have, more video here and everything. So we go through zero DTE condors, iron butterflies, calendar spreads. I mean, this is a master class of how to run these strategies and put them on. Semi-directional trades. Okay, so something we haven't even talked about yet, but this is the broken wing butterfly. Zero DTE decision making. How do you use those tools that I talked about, where you're looking at the opening range, you're looking at the expected move. How do you determine how and when to trade? Okay, so that's the course, and it's pretty comprehensive. This is the most popular thing that I've offered over the last 3 years, is this zero DTE course. So I've been teaching it for a long time now, 3 years. And so again, you can look at what's in the course, the zero DTE advantage, iron condors, iron butterflies, calendar spreads, directional trades, decision-making. It's got everything in here, everything that you need to get started with that. So again, the link is 12minutetrading.com/0DTE special. for $59. Again, it's going to be open until this weekend, and then it's going to go up to the 99. So really encourage you to jump on this. This is a lifetime skill that you're going to learn, and you're going to get it part of a new community as well, too. Okay,